All right, so this week, NFP. We had NFP this week. I told you guys Wednesday that there was some divergence in the news that came out between, let me go back one more week. Okay, sorry, you guys. All right, so there was some divergence in the news that came out on Wednesday versus the news that we had come out earlier in the week and then yesterday, just as far as our job numbers are concerned. So anytime you start to see divergence in the job numbers when it comes to the employment change and the unemployment number, that's when you start to look to NFP to really give you the true visual of what's going on in the marketplace. So the note or the message that I have put out in the group chat about the divergence, it happened whenever we got unemployment claims, because unemployment claims were actually like not that bad. They go back and they revise these numbers a lot. That's part of the reason why we record these Zoom calls, in addition to telling you guys to like just check the Forex Factory calendar at the beginning of the week, the middle of the week, and then sometime towards the end, because you'll actually see that they change the forecast. And anytime they change the forecast for these numbers, it can make or break the markets when it comes to these numbers that we're looking at. So today, whenever NFP happened, the job number came out. Average hourly earnings actually went up. That's a positive sign for the economy. I will tell you what the implications of that are in a minute. We had employment change that was relatively unchanged. So it wasn't a bad thing. It was actually pretty good. It was right on par with forecast. And then the unemployment rate dropped, you guys. So the unemployment rate is 8.4% currently. So a lot of you guys were looking at the markets today, traded the markets today. You guys noticed that US 30 did not reflect the sentiment of this news. And that's part of the reason why I was explaining to you guys Wednesday that the indices are not an direct indication of the market. Can't look at those and say, oh, or the economy, I'm sorry. Can't look at the indices and say that they're a direct correlation to the market and how well the market's doing. Because if you were to look at this news, and then even though this news came out an hour before the markets open, it was great news. It wasn't, you can't even say that the news was mixed, because it was either at or better than forecast. Whenever the market opened, the market just didn't want to deal with it. The market was just like, whatever. So what are the implications of this news? And then we're going to jump forward, because this week and last week were some pretty volatile weeks in the market. So we have to kind of like sum all of this up and kind of put your head in the space of where the market could possibly be, not only next week, but the week after. So technically this is the first week in September. That's why we have NFP. It's always the first Friday of the month. Sometimes it's Thursday, but typically it's the Friday. And the implications of this news is pretty much that anytime you get good economic numbers now coming from any government agency, it's a possibility that that could give Congress or the Fed a reason to start reversing any of the actions that they've already taken. So you have average hourly earnings that are up from forecast. So the implications of that could be that Congress doesn't provide as much stimulus as they were going to. The fact that the unemployment rate has dropped might signal that they aren't going to provide as much stimulus to small businesses or to businesses, period. And the fact that unemployment or the employment change stayed relatively the same, same thing. It will give Congress and it will give the Fed a reason to not have to provide as much stimulus and as much support to the economy, because to them, these will be signals that the economy is doing well. And we've had pretty good job numbers and economy numbers come out this week. So that was this week. How are you going to be able to use that information going into next week? First of all, I want you guys to look at this Forex Factory calendar and see that Canada and the US are on a holiday. It's Labor Day on Monday. So when you go into your charts and you notice that certain things aren't moving or certain things are moving slow, remember it is a holiday. And volatility isn't as strong on a holiday because the volume is not there. Other things that are going to kind of carry over from this week into next week are going to be unemployment claims again, oil inventories solely because we do have more storms in the tropics, and these index numbers. These index numbers don't seem like they mean a lot sometimes. These purchaser indexes and these consumer price indexes, they're going to help us to look at inflation. So the numbers that we got today, the numbers that we got this week with manufacturing and non-manufacturing is services. That on top of what's coming out next week, we're going to be able to put all that together and kind of roll into the next week, which is going to be the biggest week the Fed has left, really, before the election. I know I'm skipping ahead a week, but all of this is going to come back in this speech on Wednesday, September the 16th. You see all of this red on September the 16th. I need for you guys just to go ahead and mark that on your calendar. If you don't mark September the 16th on your calendar and you plan to trade, you're crazy. Like, mark it, write it down, do something, because this is going to be the last time potentially for Jerome Powell to be speaking and give the minutes and give a statement and give economic projections before he could potentially like not have his seat anymore. Even if Trump has a second term, he might not put Jerome Powell back in that seat again. So these are things to just think about. All of this stuff, all of the jobs numbers that I just talked about, all of the manufacturing numbers that just came out, because if Congress stalls, if Congress decides to stall until Jerome Powell talks, and Jerome Powell says, well, we had great job numbers and we're seeing economic growth and we're seeing average hourly earnings increase, Congress is going to use that as fuel to not provide a stimulus. And then you're going to have the repercussions of whatever that could be happening throughout the end of the year, going on through next year. Average hourly earnings after today, you guys remember, is going to go up because payroll tax, the payroll tax holiday. So average hourly earnings, actual amount that a person makes isn't going to go up, but the amount that they take home on their paycheck is going to go up. So that number is going to be affected. That's going to get talked about here. So I'm trying to like get you guys prepped for this. Like September the 16th, I was telling you guys about September the 16th back in like January. And then I told you again in March, and we just kind of coasted through the summer, but it's here now. Like, this is the last big Fed meeting before the election. So I need for you guys to mark it. I need for you guys to be like paying attention to all of these economic numbers that are coming out, because the Fed is going to hone in and talk about these things during that speech. So these job numbers, again, I'm gonna go back just so that you guys can see what they were. Average hourly earnings up, unemployment rate down, and the employment change was relatively the same. And then if you go back and look at unemployment claims were good. And unemployment claims were good because you had fewer people than forecasted applying for initial claims to the unemployment system or going back into the unemployment system. So those numbers were great. The manufacturing numbers and non-manufacturing numbers that we had that came out this week were great, or right at forecast. So just make sure that you guys are taking notes of these things, listening to this call again, taking notes, because September the 16th, when Jerome Powell starts talking, I shouldn't on the Zoom call that night have to go over the speech, because we already gonna know what he's talking about, because I'm telling you now. Economic projections, they've beat inflation down to the ground. We've talked about inflation. We've talked about interest rates. There's nothing else new other than the digital currency and economic growth and stimulus that there is to talk about, really. So take notes from everything that's gone on this week. Even take notes of the market movements, or mark it on your charts, because I can pull up charts, you guys, that I've had for years, since I was like in my early 20s, maybe my late teens, where I marked stuff on my chart. So if the market moves in a certain way, I can go back and say, has that happened in the past? And I have something, or an indication of something marked on my chart. So you see how the market moved today, the complete opposite of the news. Mark that, because this is showing you something. It's showing you the sentiment of the market right now. So take all these little notes, take notes on the sentiment of the market, because the market is cyclical. It happens over and over and over again. Anytime you have a recession, you're going to get a rebound. And anytime you get a rebound, you're going to get a recession afterwards. Why? Because our Fed still has not learned in all the years of being the Fed that you can't overheat the market without there being some repercussion for overheating the market. And that's exactly what we're doing now. And we're starting to see the implications and the consequences of overheating a market. So take notes. If you need help, if you have questions, whatever the case may be, definitely ask those questions, because this is stuff that's still going to be around. It's stuff that's going to be happening for years and years to come. So I'm done with the news. Does anybody have any questions or anything about this week, the news, or anything before I pass it over to Mr. Levels? And I don't know if you guys can unmute yourselves or not, but if you can't, you can type it in the chat and I'll answer it.
Cool beans. Appreciate that as always, Corman, and great job.